Right? Okay, so by the way, spoiler alert, you just learned the California Tax Board's opinion about when you leave California. It's welcome to the Hotel California. You can check out anytime you want, but you can never leave. Okay? So California, what's going on? California has the highest income tax in the country. 13.3% on incomes over $1 million. Well, everyone goes, oh, well, I don't make over $1 million, but you sell your house, you sell stock, you make over $1 million sometimes, so it affects you. There's no capital gains deduction, which means it's ordinary income, so you get to pay 13.3% on your profits in California. There's no deduction. But if you're a non-California resident, you don't pay tax on what's called intangibles like stocks and securities. So what's the game? Well, you're a wealthy billionaire and you're going to sell your company. You want to move to Texas, a non-tax state, and sell your stock because you'll pay no California tax. Unfortunately, Chris Ferrigno, who isn't here, you're out of luck because California will always tax real estate because it's based here. This only applies to stocks and bonds. That's taxed where you reside. So that's the tax issue, and the California tax man really takes that Eagles song to heart. Chorus? Welcome to the Hotel California. Great. Okay. That's what happens. So, I'm going to talk about a notorious, narcissistic, multi-billionaire. No, not that one. Since Chris is here, he doesn't have to raise his eyebrows. Okay. I'm going to talk about a guy who's the richest guy in the world, at least for a moment. This guy's named Elon Musk. He's a smart guy, sort of. What he does is, I think a couple years ago, he asked people, should he sell 10% of his Tesla stock? And they said yes. So he sold 10% of his Tesla stock and created $28 billion in capital gains. He says it's a world record. I believe him. He probably paid more tax on that than anybody ever has, federal taxes. But he started planning. He sold the stock in 2021, but in 2020, he sold 6 mansions that he owned in California because he's going to liquidate and get out of California and move to Texas. Of course, he forgot a mansion worth $37.5 million in Silicon Valley that he called his party house, but he sold all the others. So he moves to Texas. Okay, and he says, hey, I sold all my stock in Texas. No gain, no state tax. If he's taxed in California, he's got a $3.7 billion gain, tax that he'd have to pay on his capital gain. Well, you know, he likes to talk, and he makes comments that's been reported in the papers and interviews. He goes, I don't even own a place right now. When I go to California, I just stay at friends' spare rooms. His place in Texas, the mansion he moved into Texas, is a 400 square foot, $50,000 shack that he rents from his company SpaceX, and he brags about that. Well, guess what? This is the Hotel California. Just because you think you leave here, you don't. What happens is, if you have an established domicile in California, that means a fixed place where you live, you're a California resident until you establish a fixed domicile, a permanent place in another state. Which means if you decide to travel around the world, take a part-time job or a full-time job for 2 or 3 years in Saudi Arabia, you're still a California resident. You have to establish a domicile. Well, gee, leaving California is just not enough. So you must get a new domicile. So it's time for the chorus. 1, 2, 3. Welcome to the Hotel California. Making it worse, California asserts you're a resident and you have to prove you're not. So the burden of proof is on you. So when Elon Musk gets audited, assuming he does, or maybe he has, the question is, Good luck, Elon, proving that your Texas shack is your permanent residence when you own a $37 million mansion in California and you say you don't have any place you really live at and you stay at friends' homes. So, one last time. Welcome to the Hotel California. Okay, thanks. All right, so here's some tips for residency changes that do work. You gotta take it seriously. You gotta move everything out of the state. You gotta terminate your California clubs and organizations. Move out, and for heaven's sakes, don't come back. Leave, and give yourself 6 to 9 months at least, if not a year prior. And just if you're gonna have a major taxable event like selling $28 billion worth of stock or any amount of stock. But if you can't do that, and you're going to come back and forth, don't even bother. Once you're out of here, don't come back unless it's for non-business reasons, like you're going to attend a wedding or a graduation, and just try to stay a few days, but don't conduct business here. Hire Cunningham Moving to move your stuff immediately, and then immediately hire a realtor once you get to your new place, or hire one before you get there and say, I want a new house, find me a new house. Make it clear you're looking for a new residence. This is the part you could really help yourself. You write letters, emails, your Facebook posts, everything saying, I'm permanently leaving California. So sorry, all my great friends, I'm leaving California. I'm leaving California. You say that 100 times. Franchise Tax Board and the courts have to look at that. Resign from your health club and book club. I won a major case on this. There was $2 million of taxes the Franchise Tax Board was trying to assess against a client. What convinced them wasn't all the evidence and arguments I presented. It was that my client quit her longtime book club and that her mother resigned as trustee of her trust because she was going to move to another state and she didn't want to be trustee of the trust. This is kind of a great story. So the Franchise Tax Board's hassling us unbelievably, all this stuff, and I finally get an appeal with these guys. And the appellate officer's asking all these kind of really interesting questions that I couldn't quite figure out why he's asking these. And we take a bathroom break. And we walk to the bathroom and they say, gee, what's your background, this and that? And he just goes, oh, I'm a criminal lawyer. The Franchise Tax Board hired me. I go, why'd they hire you? And they go, well, I can argue really well, so they want someone who can argue before their boards or whatever to get more money, or when they screw up, who can defend them. And I went, this guy doesn't know anything about tax. So I go back and I present the most complicated tax picture I can think of. I see the guy's eyes going blank in the back of his head, and 2 weeks later, he throws in the towel and settles the whole case. So with that, if I have any more time, I'll take questions.